10-year note yields continue to rally today, getting all the way up to 459, falling just shy of that 460 level, a level it has not traded above since going back to May 30th. Now, since the November jobs report came out on December 6th, yields are up about 45 basis points. But taking an even bigger step back, since the day before the Fed started cutting rates back in September, yields are up almost 100 basis points. We've seen 100 basis points of rate cuts, and we've seen 10-year note yields moving close to 100 basis points higher. Clearly, the bond market reading something different in the tea leaves as yields going higher as rates are moving lower. But ultimately, after yesterday's press conference from the Fed chair, the future of more rate cuts seems to be a little bit dimmer than it did prior, as the market right now pricing in 225 basis point rate cuts in all of 2025. Right now, one in June and one in December. Obviously, a lot of that will change as time goes on, but yields continue to move higher again, closing out today at 459, just shy of 460, and up about 5 basis points from yesterday's close. Now, what does this all mean for volatility? Well, check out that CVOL index over at cmegroup.com. And historically speaking, yields and volatility move in tandem together. And while we have seen it stray from that norm over the last week and a half, it has resumed as we saw volatility bottom out the middle part of last week. It has been creeping higher. Well, it is starting to pick up steam to the upside. So volatility moved higher as yields moved higher today. Lastly, let's talk about what we have tomorrow. Tomorrow is Friday. We do get the PCE data. That would be the Fed's preferred inflation gauge. We also get the Michigan Sentiment Index, and then we get Fed speakers who have been on hiatus during the December FOMC blackout period. Tomorrow we'll get San Francisco President Daly as well as New York Fed President Williams, both speaking on television. So as we near the end of the week, 10-year note yields just continue to trudge higher today, getting to 459 ahead of tomorrow's PCE data, University of Michigan Sentiment, as well as Fed speakers making a return after the December FOMC blackout.